Hi everybody, welcome to another update on the stock screener. We got earnings from Trigon Metals. Let's go over it. I do not own this stock, and you know why, but I wanted to check on this company and see how they are doing. The stock price went down, went up, and is hovering around this level, so hasn't really done anything. Copper is very weak. It's probably going to stay at 4, maybe even dip below 4. Okay, financials, let's start. So this is in US dollars. Let's take a screenshot and put it here. So this was actually March, and now we're in September. Let's see how the numbers have changed a bit. Do I have the financials somewhere? Apparently not. Yeah, here at the end. But I didn't bother filling it in, apparently, because it was so bad. Okay, so let's see. Equity, 62,000, and now the equity is minus 8 million. So already looking at the equity, this is not doing well. Now let's go to the costs. I want to see the costs. AIC Q3. Let's see how they're doing here. These exercises are always good to do, so you get more experience and see what you can invest in and what not. The more companies you do, the better. So how do we calculate all-in sustaining cost? Just look at the balance sheet. So costs. Last time we had cost of sales 7 million, and now we have about the same cost. Like this. And then we add 379, that's consulting fees. Try to calculate the cost with all the costs. So consulting fees went up. Then the professional fees also went up. And then we have travel and related costs went down. That's not that much. Then investor relations, 51. 34, so that's lower. G&A 3439, up a bit. Exploration, which is not included in the C1 costs, 494. A little bit higher. Okay, so those were the costs. And they include royalties as well. I did not include depreciation because that's not in the only sustaining costs. I assumed 0 sustaining capex. This is, what's this? Production. Production was 2 million, and this time it will be this times the payability. So payability, let's look at the payability. So how do I look at the payability? You look at it via this here. So 100% payability is 3.46. What was the copper price from here till here? So third quarter, right? This is the third quarter, September. I would expect a price around 4.3. Okay, 4.3. And instead, they get 3.46. 4.3, 3.46. So is 3.46 and 4.3. Yeah, 3.46 and 4.3. So that's the payability of 80%. So the payability went down. Yes, the price was 4.3. Why do they get only 3.46? The last time they had 3.23, as you can see here, 3.23. Oh, wait. This is the wrong number. This is the realized copper price, 3.25. So it's 3.25. Payability is even worse, 76. Here I saw 90%. Look at this, it's 4.18. So in the second quarter, from here to here, you could see, let's say 4.6 copper. 4.6 copper price, and they get 4.18. 4.18 divided by 4.6, yeah, about 90%. Now it dropped to 76%. This is a red flag. This is a red flag. What happened between these two quarters? I see only that the concentrate grade went down from 27 to 21. Maybe there are also impurities in the concentrate, and then they pay less. So this is the issue, the grade, and maybe impurities of lead. So that is quite a bummer. You have only 3.25 copper price times the copper sold 2 million is about 6 million revenue. 6 million revenue, and that's this 6 million, 7 million, about the same, 7 to 6 million. And that's this number. Because they only get 3.25 for this amount of copper. Okay, so this is an important number to take into account. So all-in sustaining costs. Okay, how much did they sell? They sold 2118. The last time it was 230. Yeah, this one I took. Amount produced should be the same as the amount sold. They sold less here. They sold about the same. So yeah, let's use 2137 here, like this. Oh my god. So they sold this amount of copper times payability. Why I do this times payability? Because the revenue is much lower than the real copper price. So you should take into account the payability. And this is the only sustaining cost, 5.2 per pound. What's this? I don't even know what this V9. No idea what V9 is. Total capex. Yeah, what was total capex? I can find that here. Investing activities 5.19. That's total capex. Minus the last one. So total capex has also gone up from 2 million to 3 million. Maybe because of the pump failures, they had a pump failure. So not looking good. Capex up, which is not included in all-in sustaining costs. Payability down, and even the costs are up. So this is now 8 million, and this was 7.9 million, 8.4. So costs up, payability down, capex up, and production even down. So production is even down 2.1, and here it was 2.3. So everything is down. Everything is worse. Not good. So we need to change our numbers. Cost from 3.7, 3.8 to 5. Yeah. What are we going to do about this? Maybe they have guidance. Okay, they have guidance. costs will be at 3.3. But 3.3 without the payability in it. So 3.3 without payability. Okay, so I have already included the payability here. Yep. So I will change this 93% is now, what will we take here? It was 93%, but due to all of these probably lower concentration of copper and higher lead content, the payability is lower now. We should use the worst number, which is 75%. And it changes completely. Look at this. If you go from 90%, looks normal. Looks normal, but if you go to 80% payability, loss making. And if you go to 75%, which is it now, even more loss making. This is important, this payability number. Okay, so AISC 3.3, I can use that. They say that it will be 3.3. Yep. Copper production revised down from 12 million to 9 million, 8.5 million. That's that's down 40%. Down 40%, 30%. That's also not good. So we had 12 million and that's going to 9 million. So that's also not good. We had here 15 million plus 6 million, but that's not going to happen. 12 million. Why is it not going to happen? Probably they have some issues with production. Let's see. I have my production table here. Let's add some columns. It is not intersecting anything else, okay. August, September. Well, I could do September. Let's put this like this. This could be December, and this is September. Okay, so let's update this line. Capacity utilization. Mill throughput. So how much was the mill throughput? Mill throughput is 77,295. That's 77,295 divided by 3 because this is 1 month. So capacity utilization is normally they have 1,000 tons per day, but they are only using 83% of that. So they're still not at full capacity. So this is the mill throughput, and it's at 257. And this is the capacity utilization, still at 83%. So still not at 100% mill capacity, which is what I want to see. It needs to go to 100%. Not sure why they are not filling it, but they are not filling it. Feed grade. I expected 2% feed grade, and what do they have? 1.15% open pit and 1.79% underground. How much is that together? They're not even saying it. It's around 1.6%. 1.6%. So that's the average between this and this. Yeah, 1.6%. Let's just take 1.6%. So you can see that the grade, feed grade has gone down. It was at 2%, somewhere here, 2%, and now it's 1.6. Yep, it was at 1.8% and now it's 1.6%. So the grade has gone down. And they are expecting, apparently, the guidance says that the grade will be 1.6% now. So this is not correct anymore. Not sure why, but they were going to go to 0% open pit and 100% underground, but the underground grade was 1.8. So this is now down to 1.8, 1.6. So probably it's going to be something like this. And this is going to be, yeah, they're trying to get to 1,000 tons per day. So this should be 1,000 tons per day times 30 days. So it should be 30,000. Okay, what's this? This is the copper product tons per month derived from this here. Copper recovery. Okay, copper recovery, 92.1%, that's good. 92.1% is good. That's one of the highest recoveries that we have. The problem is the concentrate grade is not 30% anymore. The concentrate grade is not 30%, it's 21.2%. 21.2% copper concentrate grade. So that's down. That was a problem historically, that they had 18%, and now it's back to the 18% almost. So with that, you will have copper wet concentrate production of this amount, and copper product per month 380 tons. Copper product 380 times 3, 380 times 3, 1140. Well, almost. So it's about this. Yeah, it could be that this grade is even lower. Maybe it was 1.5. If we do this 355 times 3, 1060. Yeah, even lower. 1.3. Then we have 308. 308 copper per month times 3 is 924. Okay, a little bit higher. 1.35. Yeah, that's about it. A little bit higher, 1 point, let's say just 1.4. Okay. Okay, so the grade is down to 1.4. They say it can go to 1.6. That's not a good grade. Okay, you can't make money with that. Okay, so these are the numbers. Grade down, mill throughput up, but not up enough, because not at 100% capacity. And copper produced down. So copper produced, that's this per month. That's 332 per month times 12 is 4,000 tons per year. 2 pounds is times 204, so it's indeed 9 million pounds production. What's the guidance? Yeah, 9 million. So we got 9 million per year of pounds of production because of these numbers. So we can actually update our production how are we going to do that? Yeah, this needs to change already. Open pit. So this is probably a bit lower because the grade is down 10% or so. Let's say if we do this, yeah, even lower. Let's do 0. So it's about this number. And apparently for next year, well, this is full year 2025. That's actually 2024. So this is 2024. So this is the number that we get. All-in sustaining cost, yes, 3.3. This is the copper price. Capex, Capex was around 2 to 3 million per quarter. Let's say yes, 8 million. Let's make it 8 million. But I don't think they can get to 8 million. Yeah, CapEx guidance should be 10 million, but in the event sufficient capital is not available, then it will be 2 million. So this is probably going to be 2 million because they don't have any money. Okay. So loss making. Let's see the interest payments. Oh, finance charges. 1 million. Yeah, let's say 1 million. So that's the 1 million here. And basically we are loss making, so nothing to say. Next year, I don't think they are getting to anything close to this number. Let's see. Anything about Sprott? Yes, they achieved full production, 900 tons per day. Let's anything up. So here, so they're at 1,000 tons per day, but they want to go to 1,500 tons per day next year. They think that they need to look at shaft 3, that's a new area, because they don't have enough working faces. And it's limited to 1,000 tons per day. This is a problem. So they can't get above 1,000 tons per day, basically. Because yeah, it says limits the company to 1,000 tons per day currently. So they need to have the shaft 3 to get to 1,500. So forget about 2,000 tons per day. That's not going to happen. They can't even get to 1,500 now. So this number is going to be completely wrong. What to do about this? Probably going to be maybe 50% higher maximum because of this. But they need a new mill for that, but they don't have capex to do it. So do you understand the problems that I have? How do I do this? I'm just going to do it like this. Give them another year to work at this speed. And that's about it. This here will need to go from here to here because they don't have any money. So delayed by 1 year. Going to make it easy for me. And basically, it doesn't look good. This is going to be absolutely loss making. They need to issue a lot of debt or equity to even get to 2,000 or 1,500 tons per day. Yeah, payability down. This is going absolutely the wrong way. And that's why I'm not going to buy it. Maybe update this a bit. 30 November. What's the market cap? 37 million CAD divided by 1.3537. So it has gone down a bit. Market cap, valuations, share price 0.84 divided by 1.37, and actually also divided by 5 because they did a stock split. But anyway, this is the market cap. AISC is not 2.2, it's 3. Let's say 3.5. I don't believe these numbers anymore. Let's just give it 3, let's give it 2. Production here is not 22, it's 8. Next year, let's say maximum 12, and maybe 20. So what do we get? Yeah. So it works, this chart. It tells me that there's downside risk. This is 2024. Wait, copper price is 4. Actually not that bad. Market cap here. Yeah, but there's downside, and this is going to here, so downside risk. EBITDA is okay, but after all the other costs, this is loss making. This one is 2023, 2024. Yeah, because costs are up. Actually, this is the AISC. Yeah? The AISC. Minus AISC. Actually, this AIC is 5, right? Ownership, copper price, B17 is production. Yeah, actually the AIC is 5, so this should be 5 basically. 4, 3. So this is a really bad stock. Yes, the AIC has actually gone to 5 if you include the payability, which I did include in my calculation here, coming from the revenue. And then we have the costs. Of course, this needs to be 10 as well. So it's not that bad, but yeah, this is not going to be right. Yeah, just for it's probably the same number here. I'll do this on my time, but you can see that this is loss making. Okay, loss making, no chances to do expansions. So I expect this to drop lower. Okay, that was the update on Trigon Metals, and it's not looking good. All metrics are down. And I'll see you next video. Bye.